Well, good morning all, and thanks for joining on this webinar today. Really appreciate you giving up your time while we cover off on this JobKeeper initiative. So as no doubt most would be aware, there's been a lot of government initiatives via stimulus packages and so on, both federal and state, and can be a little overwhelming at times, particularly when they come out at the speed that they have been coming out. Probably the premier initiative in the government's arsenal is the JobKeeper payment. It's a $130 billion initiative. Over the next 6 months, it'll form 12% of the nation's economy. And so we'd like to, I guess, run through the guts of what we know so far. So there's been some guidance issued by the Tax Office and by the Treasury, and there's further guidance still coming out. So while we perhaps don't know everything just yet, there's a fair bit we do know, and we'd like to share with you what we do. So my name's Alistar Dent. Joining me on the call today is Gavin Tiefel, both directors here at Quantum Advisory. And the agenda for the next 25 minutes or so is there on the screen. So what is JobKeeper? Run through the various elements that exist within JobKeeper. How does it work? We'll unpack some of the detail on those elements within the package. The $64,000 question, is your business eligible? Perhaps more than $64,000 actually. But the question that every business owner wants answered is, will I be eligible? We'll run through a handful of real world examples to demonstrate some of the different elements within JobKeeper and what impact that has on eligibility and payment. And then finish up with, I guess, some action points as to where to go from here. So timing is critical, and we'll hopefully leave you with some key takeaways in that department. Unfortunately, we won't have time or scope to take or perhaps to answer questions today. However, do feel free to throw them in the chat box by all means, and we will come back with answers to whatever questions we do receive today. So what is JobKeeper? So as we said, there's been plenty of headlines and some detail, not all of it consistent in the news outlets. If we look at the basic elements, it's there to support businesses with a genuine revenue decline. So 30% is the mark that the government has set. It isn't automatic, so there's elements of government initiatives out there at the moment that are automatic. You don't need to do anything. If you are eligible, you will receive the benefit. The cash boost perhaps is one example of that, some of the payroll tax concessions and so on. That's not the case with this initiative. There's quite a bit involved in it, and it isn't automatic. You need to assess your eligibility. You need to actually apply for it. It's a 6-month time frame, so starting on the 30th of March and going through to close on the end of September. So it's a 6-month or 13 fortnight time frame. It is a genuine wage subsidy, so the intention by the government is to maintain or control, you might say, unemployment levels, and to keep people in work and to give employers an incentive to keep employees on. So it is a genuine wage subsidy designed to reduce the cost of employment for employers or for eligible employers. As far as the quantum of the benefit, it's $1,500 per fortnight before tax, so $750 a week. It is paid through employers in arrears, with that subsidy designed to be then unpaid to employees. And then finally, it is administered by the ATO. So the ATO has the systems and the data in place to administer this scheme. There are pretty big numbers involved in the scheme. As we said, it's a $130 billion initiative. And so you can see on the screen there the potential benefit to employers, ranging from somebody with 5 eligible employees, nearly 100 grand over the 6 months if they qualify, up to somebody with, say, 40 employees, you're getting north of $750,000 in wage subsidy. So very big numbers we're talking about, and we don't want anybody to miss out if they are eligible. So Gavin, perhaps you might like to take us through some of the detail on how it works.
Yeah, thanks, Alistar. That's good. It's a good overview. So the main elements in terms of the way that the JobKeeper works, the first key thing that has to be established is a business's eligibility. Now, the core part of that is to establish a drop in turnover, and the magic number there is 30%. If a entity hasn't had a drop in turnover, it won't be eligible at all for the JobKeeper program. So the first step is that a entity needs to register. Now, up to this point, there has only been the ability to register an expression of interest. There will be the ability to register with the ATO as of Monday, the 20th of April. A part of that process of registering will be to nominate the employees for which you are minded to claim the JobKeeper for, and that will require notifying a tax office of that, as well as getting a nomination signed off by the employee and the employer. In terms of the timing of payments, as Alistar has gone over, it's based around a fortnightly payment. However, that is paid monthly. So I guess by way of example, if you were claiming JobKeeper for 2 fortnights, for example, in July of this year, you would have to apply for that by the 31st of July, and payment for that would be made sometime in August by the tax office. There is a fairly strict reporting process. Each month when the application goes in for the payment, there is amounts that need to be reported, notifying the ATO of turnover for that month and projected turnover for the following month, and that needs to be notified to the ATO each month, each time a claim is made for the preceding month's JobKeeper. Then last but not least is integrity measures which the ATO have put in place, which essentially are to ensure that the system isn't abused and that it's used rightly and for its correct purpose. And we'll cover off a bit more on that later in today's presentation. So the burning question, is my business eligible? And as mentioned earlier, we need to become an eligible employer. So we need to be able to demonstrate a reduction in what's known as GST turnover of at least 30%. The next point on that is an eligible employee. Now, the key dates for that is that the employee must have been employed by you as of the 1st of March 2020. If an employee has been employed by you after that date, there is no claim that you can make for the JobKeeper payment. There needs to be, as we've indicated earlier, a notification must go to the ATO each month that JobKeeper is being made for the employee in question. And then the other critical part of this is the wage condition. Now, the wage condition is that an employee must have been paid an equivalent of $1,500 per fortnight through the month of April to qualify for this concession. Now, if an employee was paid less than that, there is no JobKeeper available at all. However, if somebody was being paid, for example, $1,000 per fortnight, you can make an additional payment to them through the month of April to bring their wage up to $1,500 for the fortnights in April. and in doing so, then be eligible for the full $1,500 a fortnight of JobKeeper payment. So what happens during the month of April is critical, and it does mean that you could be having to top up employees' wages to get them up to the $1,500 per fortnight for the month of April, which could be a drain on cash flow. But if you don't do it, it'll result in the JobKeeper payment not being available at all. Is there anything you wanted to add to that, Alistar?
Yeah, I think it's a good point, Gavin. I guess a practical example of where it comes up would be for part-time, perhaps a permanent part-time employee or a long-term casual employee might work, 2 or 3 days a week and not have a remuneration level above the $1,500 a fortnight. So the wage condition essentially says that we have to pay the employee the $1,500 first before we're eligible to receive the $1,500 JobKeeper from the government. So perhaps
that's correct.
Go over what makes an eligible employer.
Yep. So first step there, as you can see on the screen, carried on the business as of the 1st of March. So that's critical. If we've got not a very common scenario, but if you've gone into business or started out a venture since the 1st of March or begun employing after the 1st of March, you won't be eligible unless you were in business before that yourself, in which case you may be able to claim it for yourself, which we'll discuss shortly. The decline in turnover test, as I indicated earlier, is the most critical. The 30% reduction in GST turnover is critical. If we can't get across that hurdle, there's no JobKeeper for anybody. And then that the employer isn't specifically excluded. Now there's a few employers that are excluded, such as government departments and other things like that, which we won't go into here. I think most on the call would not be specifically excluded. So the turnover test, what does that look like? So it means a business downturn of 30% or more. Now, not-for-profit entities can also get this JobKeeper payment. However, they need to be able to prove a reduction of 15%, not 30%. So GST turnover is the way that they've defined what that looks like. So GST turnover revolves around the way that income is reported for GST purposes. So some entities are able to declare GST and turnover on a business activity statement according to what cash is being collected for a GST period, whilst others, it may be the value of invoices raised. Now, GST turnover also excludes exports, and some other input taxed or GST-free supplies are also left out of the equation. But essentially, it's the GST turnover reflects for the most part, the revenue that is put into our BASs each month or quarter, depending on our reporting cycle. Now, comparative periods is how we calculate the 30% reduction. So, by way of example, if you were eligible at this point, you could compare what your GST turnover was for March of this year as against what it may have been for March of last year. And if there is a 30% reduction, you may be able to, or you would most likely be eligible for the JobKeeper payment. You may also look at the June quarter period for 2019 and compare that to a projected GST turnover for June of 2020. We'll discuss that a little bit more shortly. And the other period we could look at this point would be what the projected GST turnover is for April of this year and compare that to what it was April of last year. So there is the ability to look at this on a monthly basis, or it can be looked at on a projected quarterly basis. And above all, there is the ability of the tax commissioner to be involved in giving this endorsement for whether turnover has reduced. There is certainly situations that may have cropped up where you may have had significantly reduced GST turnover for some reason, or you may have had significantly high GST turnover for some reason in the comparative period this year. And so application can be made to the Commissioner of Taxation to exercise his discretion on that front as well.
It's a good point, Gavin. I'd also just add to that on the comparative period, so we could be not eligible at the moment, looking at April or May or the June quarter turnover, but we could be eligible later in the JobKeeper period. So any month or any quarter in the 6-month JobKeeper period can be compared against the comparative period last year.
That's correct. That's good, Alistar. So once we've gone down a path of establishing that we are an eligible employer, we then need to consider whether the employees that we have are eligible for the JobKeeper payment as well. So an eligible employee typically is a full-time employee, can be part-time and can also be a long-term casual. The employee needs to be at least 16 years of age. And as we indicated earlier, it's important that the employer was employed as at the 1st of March 2020. That does tie into the restrictions around employing a casual or claiming JobKeeper for a casual staff member. They've used the expression there, long-term casual, and there is some restrictions around what that definition looks like. There needs to have been a repetition of employment. It needs to have been with some regularity and needs to have been systemic to be able to demonstrate that a casual employee does meet the eligibility for the JobKeeper payment. The employer needs to be currently employed, and that of course includes those that have been stood down, who are going to be broadly very much recipients of this initiative. And there's also residency requirements for both tax and social security. A eligible employee, of course, can only receive JobKeeper through one employer. So that needs to be looked at. It's particularly important with part-time or casual staff members to ensure that they're only claiming it through one employer. And as mentioned earlier, it's crucial that they meet the wage condition, which is the $1,500 per fortnight minimum wage through the month of April. And as we said, that can be made up by you to the employee. Through the month of April, you will of course get it back when the JobKeeper payment commences in May. And the other person who can be an eligible employee is a person that is known as an eligible business participant. Now, this expression effectively captures sole traders and persons who run their own business but don't specifically take wages out of that business through payroll. So an example of that could be for example, a mum and dad partnership situation, and dad is involved in the running of the partnership business. He doesn't take a salary out of it, but he lives on drawings from the partnership profits. He can qualify because he's a business participant. However, only one person can be an eligible business participant per entity. So he could be in a partnership situation. He could be running a discretionary trust and taking his income in the form of trust distribution. In that case, one trust beneficiary could be the eligible business participant and therefore claim the JobKeeper. Or it could also be a situation of take a company where the eligible business participant may be taking their income in the form of dividends, one person per company would also be eligible to claim the JobKeeper payment. So what we wanted to do now was to run through some, I guess, some real world examples of what this looks like playing out in practice. And the first example that we have there is an entity known as Tyreco Pty Limited. So it's a proprietary limited company running a business. They import a range of vehicle tyres and they wholesale these. So it employs 8 people, and that includes the business owner. 6 are full-time, 2 are part-time, and they have a total wages or payroll annual amount of $545,000. So fairly rank and file family type business. So eligibility, so the first thing that we need to establish is whether there's been a 30% downturn in GST turnover, and they've established, looking at March year on year, that they've had a 35% downturn, and therefore all of their employees are eligible for the JobKeeper payment. However, one of the part-timers requires a top-up to their wage. So let's take the view that that person was being paid $1,100 per fortnight traditionally. Well, through the month of April, we'll need to top their $1,100 per fortnight up to $1,500. So there'll be an extra $400 a fortnight need to be put in, but we will of course get that back once the JobKeeper payment begins to come in. So each of the employees are eligible for the duration of the JobKeeper period, which is for the 6 months through to the end of September. So Tyreco in that event puts its claim in, it's eligible, and so are its employees, and so it will pull in $156,000 over the 6-month period, and that will help to cover nearly 60% of the wages bill during this period. So you can see what a significant initiative JobKeeper is. Then just on to the next example. So in this event, we have what we've called the Rona Winery. It's a small business. It's a winery run by Mr. and Mrs. Rona, and they were in a game of supplying wine to restaurants. Now, this entity is run through a family trust, and they employ their 2 sons full-time, and they also employ 4 casual fruit pickers to pick the grapes. And Mr. and Mrs. Rona, they work in the business but aren't on the payroll, so they're taking their income in the form of trust distribution. Now, in terms of eligibility, things have been okay up to this point. However, they have done some projections and confirmed that they will have a 40% downturn in sales or in GST turnover when compared to June 2020 year on year. So there's a few parts to looking at who the eligible employees will be. Of course, there's no doubt about Rona Winery itself. It's had a 40% downturn, but we've now got to turn our attention to who the employees will be that will be eligible. So firstly, one of Mr. or Mrs. Rona will be eligible as the eligible business participant or as the business owner. Then the 4 casuals, they won't be eligible as they're not long-term casuals. They come and go. They don't fit the definition of long-term casual. There's no systemization about how they do their work or when, and so there'll be, in this instance, no JobKeeper available for those 4 casuals. So the outcome in this case would be a total of $40,500 received over 9 fortnights, which would be for the 2 full-time sons that they have who work full-time through the payroll, and of course for, let's say, Mr. Rona can also apply for this himself. So there's 3 of them that will be eligible for the initiative, but the casuals won't be.
Thanks, Gavin. Just before you go, just to there's a question come in about multiple, more than one beneficiary in a family trust, and it's a question that often comes up. So probably this example deals with it. We can see that there's more than there's actually two beneficiaries. So Mr. and Mrs. Rona, who are beneficiaries of this family trust, could be a situation where there's more than two, and it's very clear that only one of them, only one beneficiary, will be eligible as an eligible business participant.
Yep, exactly right. In this case, as you say, there could be many beneficiaries. There could be many family members, children, grandchildren, who could all fit into the beneficial class. But you say certainly only one of them would be able to claim a JobKeeper. So next example we just wanted to have a look at was a restaurant situation, what we've called the Avenue restaurant. Now, it's a premium restaurant, and in this case, it doesn't offer any form of takeaway. So it's in the unfortunate position, as many in this industry are, where it's had to shut its doors completely to comply with restrictions. And they've typically had 20 long-term casual staff members who have come and gone in a systemised, regular way, and all therefore fit the definition of being long-term casual staff members. Now, because of what's happened in that industry, all of these staff members have been stood down without pay. Now, in terms of eligibility, there's no issue here. The turnover's completely gone, and certainly no problem proving a 30% reduction in GST turnover, as there's no income at all being received. So the outcome in this situation is that all of the employees are going to be eligible, provided they meet or did meet the wage condition of the $1,500 per fortnight. So if each of those staff members were on $1,500 a fortnight, or were topped up to $1,500 per fortnight in the month of April, the Avenue restaurant will receive a total of $390,000, which it will have to pass on in full to the employees. So each of the employees will receive $1,500 per fortnight right across the 6-month period, and that the Avenue restaurant will claim that and then pass that on in full to each of those employees because they have no other income. And of course, the benefit of this, and a lot of the government's thought behind this, is that it's allowing a business like the Avenue to be able to retain its staff, keep its team together so that it can reopen again, hopefully in October or when we get to the other side of this crisis. Then, did you want to add something to that, Alistar?
No, I also just had another question from Tim, and it's come up more than once. So he's got a situation where he's got a trading company where he owns the shares in the trading company via his family trust, and so he doesn't draw a wage from the company, and his income comes via dividends which flow from the company, but not to himself directly. They flow via his family trust. So as the guidance stands at the moment, Tim, you will not be eligible. However, it is a point that has been taken up with the ATO on a number of fronts. And although you're not eligible at the moment, there may be further guidance received that will open up that avenue for you to access it as an eligible business participant. I hope that helps. Carry on, Gavin.
Very good. Yeah, there is still further clarity on some of these points to come from the ATO. So the next example we just wanted to run through was a business that we've called Premier Projects. Now they're in a project-based industry, and they're doing office fit-outs, and currently employing 30 full-time staff. It's run by John Smith, who doesn't take wages, but he takes dividends. And at this point in time, they had some work in the pipeline. They had some projects underway, which they're still finishing up and still invoicing. So there's no decline in turnover at this point. So raise the question of eligibility, and then means that a projection needs to be done. Now, in this case, John has undertaken his projection, and he's calculated that the June quarter will probably be down about 40% when compared to the same period last year. So that being the case, his employees will be eligible, as they're all full-time. He's doing what he can to keep them on board. And John himself is also an eligible business participant. Now, in a case like this, Premier Projects could receive $604,000 of JobKeeper payment across the 6-month period. So it's a very significant number when we start to look at the reduction in turnover and a good number of staff. Now, the situation in this case is that when we get to the end of June 2020, they sit down and calculate what the actual GST turnover was, comparing the June 19 quarter to the June 2020 quarter. And we're well on the road to claiming JobKeeper at this point. And we discover that there's only a 27% reduction in turnover and not a 30% reduction in turnover. Now, in this case, the claim is likely to be valid because it's within what the ATO have defined as within a tolerance level, and the calculation has been made in good faith. Now, those expressions, tolerance level and in good faith, aren't defined at this point. What would happen if that number came in at 25% reduction or 22% reduction or 20% reduction? We still don't know, but the indicators are that if it's meant to be 30% and it comes in at 20, 29, 28, 27, maybe 26, that it will fit into the ATO's tolerance level. I think they recognise that it does have to be done on a projected basis. But just to be aware of that what that level of tolerance is still unknown. Do you want to add anything to that, Alistar?
No, that's good, Gavin. I guess it comes up quite a bit in relation to perhaps project-based businesses where they might have had a significant drop in their sales pipeline or their order book, but because the pipeline takes a few months to roll through and be invoiced, they're not seeing any decline in revenue yet. So there is provision for turnover reduction to be estimated, and I guess we could go into that in further detail or answer any specific questions. But I guess it's an example that comes up quite a bit, and that just probably is very relevant to those in project industries. So we could go over more examples, but I guess we're pressed for time. So where to from here? The timing, as Gavin said earlier, is very, very critical. And because the government is keen to get funds out there, the timeframes are very short. So the first date to bear in mind is only a couple of days away, 20th of April, which is Monday. That will be when the application through the ATO opens up and will be available. The 26th of April is the date in which all applications must be complete and lodged if you want to be eligible for the payment of JobKeeper in May for wages paid in April. Then the following 30th, which is the Thursday, employees must have gone through all the documentation in relation to employee nomination and have had that signed and returned for every employee. And then on the 4th of May, the JobKeeper claim form will be available on the ATO website for businesses to complete. So the timeframes are very tight, and I guess the word there is to act quickly so you don't miss out. So I guess a word of warning, don't get it wrong. As we said, $130 billion is 12% of the economy. It's a very large amount, and the ATO will be the cop on the beat to make sure that the money is going to those who are eligible. It's very tough and stringent integrity measures which Gavin has covered off on to some extent, but there'll be data matching capability from the ATO. They've got obviously single touch payroll and a bunch of other data points, activity statements and so on, to cross-reference data in relation to this scheme. There's applications, declarations, there's reporting and record keeping requirements. So there's a reasonable chunk of, you might say, administration and documentation to make sure that is completed properly and completed on time. And if you are an employer that goes through the claiming process and receives the JobKeeper subsidy, the onus is on you, obviously, to get it right. If you get it wrong, the employer carries the obligation to repay. So to give that some context, an employer might have claimed the JobKeeper subsidy for a number of employees. The funds have come in, the funds have been paid out to employees. If that business is later found to be not eligible, the onus will be on the employer, or the obligation will be on the employer to pay those funds back. And in cases where the ATO determines that there's been fraud or mismanagement, there'll be up to 75% penalties. There'll be interest payable and potential imprisonment. So the point there is we have to get it right. And I guess it all sounds a little scary, and that's perhaps because it is, but there's a lot of money at stake. There's a lot of benefit available, but you have to get it right. So we are here to help on that front. As I said earlier, our objective is to make sure that every one of our clients, indeed every one that we can help that is eligible, does get the assistance from the government. To that end, we are providing assistance really in two stages or two services. First, in relation to handling initial establishment, so assessment of eligibility and all the documentation that goes with that to leave an audit trail and pass review. Scheme registration and the applications, both for the employer and the employees, and then the management of the employee nomination process and documentation. In addition to that, for those that require it, we have a service to handle obviously the establishment in the first place, but then the ongoing management of the scheme so that everything is done correctly and in the proper manner. So monthly reporting and the application requirements, which are required every month, the ongoing employee eligibility testing to keep that up to date, any integration support required for payroll, and then liaising with the ATO as required, and audit and review support. So I guess the message we're trying to provide is that we want businesses to access this scheme. There's substantial benefit available, and we want eligible businesses to access every dollar that they are eligible for. And so we are here to assist on that front. Key takeaways, as we've said, there's big dollars available. Time is of the essence, so we need to act quickly. As we said, the first critical date is Monday, when registrations open up on the ATO website. The requirements and the guidelines are complex. They're not black and white. There's plenty that we do know. There's some things that we still don't know and are waiting further guidance from the ATO on. So we need to ensure that you're rigorous in determining eligibility. Don't fall foul of the ATO and of its requirements on that front. As I said earlier, we are here to help. And if in doubt, don't miss out. So if you think you will be available, make sure that you go through the registration process, and we can help if you've got doubts on the eligibility. So we'll leave it there. There's been a lot of questions come through on the chat, on the Q&A. We will endeavour to get answers out to those who've put their questions in just as soon as we can. Once again, we thank you for your time in coming on board to the webinar today, and we wish you all the best. Thank you very much.